Welcome back to the Generation Finance YouTube channel. In today's video we will be looking at some of Warren Buffett's best kept secrets. Make sure you watch the full video if you want to uncover all of Buffett's investment strategies. Also known as the Oracle of Omaha, Warren Buffett is considered to be one of the best investors in history. The 90-year-old investor is currently the sixth richest man in the world with a net worth of $108 billion. Warren started investing at the young age of 11. When most of the other kids were on the lookout for popsicles and candies to spend on, Warren bought his first ever stock at $38 per share. Sadly, he also made one of his first investment mistakes by selling immediately when the market rose by a mere $2. After he sold, the stock prices rose drastically to $200 per share. Warren has come a really long way from being an 11-year-old purchasing his first stock to becoming one of the richest men in the world. In today's video, we will be diving deep into how he was able to achieve this, revealing to you all of Warren Buffett's biggest investment secrets. For more videos about everything finance, wealth, and money-making tips, be sure to hit the subscribe button and turn on the bell notification so you never miss an upload. Number 1. Decide that you're going to be rich. I know that this isn't something you may expect to hear, but you'd be surprised at how many people haven't made the decision to be rich. Believe it or not, but the power of the mind is real. Once you believe in your heart that something isn't achievable for you, you will never achieve it. Buffett said that he always knew he was going to be rich and never for once doubted that. At 13, Buffett was already telling his friend that he must become a millionaire by the age of 30, or he'd jump off the tallest building in Omaha. Now, while that is really extreme and definitely not something I encourage you to do, it just shows the mindset Warren had. He set high expectations for himself and he worked hard to achieve his goals. So you want to become rich? Have you truly decided within yourself that you will become rich? Number 2. Buy and hold. Warren learned from his very first investment that selling quickly is a very bad strategy. Since then, he has embraced the buy and hold strategy, and he continues to do so till today. Buying and holding is also known as value investing, which is what Warren is most known for. The logic behind value investing is buying stocks of a company when they're cheap, and simply holding onto them for as many years as it may take for the company and its stock to rise in value. In value investing, you're looking at the company's measurable value and not just its current pricing. You don't just look at the stock, but you look at the company and what value it has to offer. If you think the company is going to keep providing value to its consumers, then just buy the stock and hold it. As the years go by, as long as the company remains valuable, the stocks will keep on rising. This is exactly how Warren Buffett has built his wealth over the years. One of the very first value investments Buffett made was in the company American Express. He bought its shares at $35 per share, after the stock prices fell due to a fraud scandal. In 2 years, American Express shares started selling for more than double the price Buffett purchased them at. And in 4 years, it hit $180 per share. Buffett also value invested in Coca-Cola. Today, he owns 7% of the company, in what is still his most lucrative investment to date. Don't trade. Invest. That is the mantra of Warren Buffett. Number 3. Cash is the ultimate. Unlike many modern investors who believe in cashless living, Warren Buffett believes that cash is the ultimate. One of Warren's biggest investment secrets is to always have cash, and his reasoning for this is pretty simple. You might get an unexpected opportunity to invest, or maybe to help withstand a catastrophic event. Without cash, you'll have to depend on credit to pay for these purchases, which can ruin your credit and make you lose more money in the process due to interest rates. As an investor, you should always have cash or at least investments with very high liquidity. Number 4. Low-cost index funds are sensible investments. Warren Buffett has said it time and again, that putting your money into index funds is a reliable way to capitalize on market gains while hedging against risks. Buffett also claims that it is a great way to build a retirement stash, because they are inexpensive and not tied to the success of one single stock of a company. Warren believes that to build wealth, investors should consistently be buying low-cost index funds. People can sometimes be obsessed with taking excessive risks, and while they pay off sometimes, they mostly don't go in your favor and the loss can be crushing. Number 5. Look out for companies with a dividend history. One of Warren's investment moves is to always invest in companies that have a track history of paying their dividends. He believes that a history of consistent payments shows that the company's finances are in good shape, shows steady and reliable growth and profitability, and that it is a sign of a good investment option. Before investing in Coca-Cola, Warren Buffett tracked their dividend history, and when he saw that it was good, he invested. Today, his company Berkshire earns almost $4.6 billion in dividend payments from the many companies they have investments in. Number 6. Invest in yourself. Learning is a never-ending cycle. If you don't invest in yourself, you are simply limiting your potential as a human. Warren is known for spending time working on personal development, by reading books, taking intentional moments to just sit and think, and attending conferences to learn from others. He once told Yahoo Finance that the best investment anyone can make is to invest in themselves. And if you are wondering what you should learn first, writing and public speaking is what Warren Buffett started with. Young Warren took a Dale Carnegie course on public speaking early on in his career. And he has since made a lot of money from public speaking and tutoring. To date, he continues to speak at numerous conferences, and to shareholders of Berkshire when necessary. Investing in yourself is also about taking care of your body and mind. Buffett once said, "If you were given a car to use for the rest of your life, wouldn't you do your best to take care of the car? So why don't you do the same for your body?" And honestly, I couldn't agree more. Number 7. Invest in what you know. Buffett wholeheartedly believes that the number one rule any investor should live by is to limit their investments to companies and industries they are knowledgeable about. A good investment strategy is to first understand how a company makes money and the main factors that impact their industry. This strategy has guided Warren's investments over the years and also continues to do so. Although he has come under heavy criticism for ignoring tech companies, the fact that he is still one of the 10 richest men in the world means that he's definitely doing something right. Warren believes that if a company's structure looks too complex, you shouldn't spend too much time trying to evaluate it. Just move on to a business you can understand. He once joked that he invested in Coca-Cola because he drinks up to 5 cans in a day, and so he knows the company very well. This is why Warren has avoided investing in tech, with the exception of Apple. Number 8. Value over price. Before investing, Warren always looks out for value over price. One of his secrets is that he never invests based on the current hype surrounding a company. Instead, think about the value of the company, even if you have to pay more to get it. For Warren, an efficient long-term investment strategy is to pay a fair price for a quality company, instead of low prices for a mediocre one. The company should have inherent value and not just perceived value from what people are saying. According to Warren, a valuable company is one that can remain predictable for the next 10 to 15 years. He firmly believes that price is what you pay and value is what you get. Which is why price is not always a guiding principle, because price doesn't always equate value. Once you're able to distinguish between value and price, you'll be able to make much better investments. In the words of Warren Buffett, buy a stock the way you would buy a house. Understand and like it such that you'd be content to own it in the absence of any market. All in all, Warren Buffett has made a fortune investing, and if you can play by his rules and guidelines, you're well on your way to becoming one of the best investors in the world. On that note, we've come to the end of this video. If you enjoyed watching this content, be sure to give it a thumbs up as it helps us greatly. If you are not subscribed already, please do subscribe to this channel, turn on your notifications, and we will see you in the next video.